So this video will be explaining about blocks, like opposite candles. It may be conservative, it may be let me say this block will be very useful in terms of trading zone to zone, like supply and demand zone on gold trade. This is XAU USD gold. Alright, so this will be it. We are working on weekly time frame. On the weekly time frame, we will mark the highs and low, or if we are marking out a bearish candle. Bearish candle is this black candle here, because this is the opposite direction. This market was pulling up with a bullish candle, this gold candle, and now it start pulling down. This is in opposite direction. This is a bearish and this is a bullish. After pulling down, it went back up, forming a bullish move again, a bullish candle. After that, this is it. This is a weekly candle. So next week another candle open from here where this one stop. So this one here is a bearish candle. This one here too is a bearish candle, bearish candle, bearish candle. This opposite direction, this is a bullish candle. So let's start from here. A bullish candle, a bullish candle, bullish candle. Here you have opposite direction and the color is different too. You can customize it to your own choice, which color you like. But on gold, I love doing it this way. Then on currency, I love doing blue and black. So now the opposite direction, this was upward, which is bullish. This buy side. So now it's pulling down, which is bearish, and this is a downside, down, which is the opposite direction of this. Now we have a pull up back, which is the opposite direction of this bearish. After that, we have opposite direction of this small bullish we have here. We have a bearish. So this we are going to mark out. Just watch carefully how I mark it out, so then you know how to mark out zones to know the one that is valid. If price leave a specific zone, is heading for the, when you look left, if price leave this zone here, now let me say price leave this, price form this bearish and then give opposite candle and then give this one candle too. Now as it's going back up with this, let me say this gold candle, where is it heading to? It's to meet this previous, this high here, this high here, and this one, which is the candles. Those are the candles, that's the highs of the candles. That's where it will be moving to. And when it break it, you know that it's going to still pull up. It might have a retracement. After this pull, we broke this level. You see this high, you see this candle broke it, and then it has a retracement back. After the retracement, where is it retracing to? When you are trading, we'll talk about multi-time frame analysis, a brief of multi-time frame analysis, because that's what you'll be using to take this gold trade setups. Now it's pulling back down. If it go in a lower time frame, you see that maybe there is a way opposite candles around here. That's where it pull down, gets to, and then start pulling up. When it start pulling up, where is it getting to? A high, the highs. So after going to the high, it broke. You see this candle now broke this one. It start retracing back down with this opposite candle, getting to a certain level too, and start pulling up high, pulling up high. So this is how it work. Let me start in marking it from the weekly candle, because that's what we'll be using. We'll be using weekly candles. So if price, let's say we are doing this analysis, if you're a swing trader or position trader, let me say you want to short this market from here, and this market will break a neckline, let me say break below this yellow candle, and you want to sell. Your sell you are selling, what you are targeting should be below this above this candle to take your profit. But if you break below this candle, you know that is a valid sell. It will drop down to where? It will drop down to this one. And if you break below this body, not the wick, the body, this is the high, and this is the low. If you touch this, it might touch this up one and start pulling back up. But if you break below it, that is why you have to take your profits before reaching to this zone. But if you break it with the body of the candle, not the wick, if you break it and the body remains below this line where the low of this candle is, you know that where we'll be targeting is another what? This side. And if you break below this one with the body, we'll be targeting this side. But since it's breaking up in this position, it's breaking above, we are targeting all these highs, and it's still breaking above with the body, we are still targeting up. And gold is a value. The gold has value, and a very very useful assets. Like, it's a safe haven where if anything is happening, maybe economic or anything at all, inflation, people run, investors run, take their money off of dollar and other this thing to invest in gold. That's why you see gold in the long run, gold have been bullish. You see gold have been bullish. You see, in the long run, gold have been bullish. If you go to, let's say we go to 1 month, you see the picture of gold. See, it's going up, like pulling up. Though we have retracement to the downside, but it's still pulling up. So that's to show you that gold is a safe haven asset. Now, let's talk about this now. Okay, let me just start from this monthly to mark. But I would just love to use weekly, but let me just start with monthly. We start from here, we mark out the high of this candle. The high of this candle. We drag it to the right hand side. And as we are doing it, we are going to be labeling it. We'll label it. I just love using the other this thing, so it's not just occupy much space, but let's just leave it like this. Since we are in the monthly, we are going to mark this as M to just symbolize monthly, and we are going to lock it. Now we mark out that one. There is no other point again we are seeing. There is no opposite candle we are seeing. So we go down to a lower time frame. This is what we call top-down analysis. As we have analyzed this, and this is just simple strategy, that's why it's not complicated. You just go down again to a lower time frame. Mark out, go to the weekly. You see the zone in the monthly. You see where it's showing. Now we go down to weekly. What zone are we seeing? Do we have a lot of zone? We have this zone here, we have another zone here, we have another zone here. So probably there's another one for me. Maybe next week when it drop, we might have a high that will drop line on. So now we'll go with the second line, dropping our trend line on it, marking out this zone, the high of this can. This is a weekly. We drop it and then we drag it to the right hand side to fit in. Then we target W because that's a weekly, and then we just lock it. So you see how it works. Then the next one, you mark out same thing in all. Let me just do the marking. That's not accurate. So we are done with the marking now. Alright. So now at this point, we need to go to a lower time frame because we are done with the marking the recent, the zones. So we'll go to, there's no point again above, there's no zone again to mark out. Then we'll start from here to go down to a lower time frame to check out things. The next one will be the daily. The daily, we'll go down to daily. So you can see on the daily, here on the daily we have lots of it. But we are going to mark the recent. So let's just don't go far. We are going to mark the recent. At this spot now, you see the zone, you just mark the recent one above here. So you just note that. I'm going to change the line I'm using because that one is stressing me. So I'm going to be using this one. Then drop it and just tag it. This is the daily. So you see how this one is simple. So at this spot now, you can see we have a high. We have this high here. You see this high here that formed. We can place here because on this chart we have a high. This one we have a high too. We can place here. So at this point I'm going to leave this one here, and then we are going to tag it because this is a daily chart. That's a daily point of interest. Because when price gets to those zones, those are point of interest because you find it useful. Those are key zones. This is a D. So unlock it. So that's it. And then if you look at it very well, you see that this spot here, we have a low. This is a point of interest, and we have the A as a point of interest too. So let's mark this low. This is point of interest. We are still in the daily chart, so we'll still put the D. So this is how it works. We now go down to 4 hour. That will be the next time frame for our top down analysis. So you see what price is doing. Just watch as this price broke this level. Once price broke this level, went up. You saw what price did. In price came back down. After breaking this level, went back up. This is a key zone. This is 4 hours. So that's how we are going to mark it. 4 hours. 4 HRS. So just watch what my price did at that spot. Market broke this 4 hour, went back up. Retracing back, we know that this is a point of interest. So at this spot, you see, you find your entry around here. You see the market at the top, the market went back up. You see, it went back up. So at this high now, this is a point of interest as I told you guys. Here is the point of interest at this spot now. This is a 4 hour point of interest. 4 HRS. As price gets to that spot, it start tapping back down again. So if you look at it, where those are zones, you do that from the higher time frame to the lower time frame. So you see from here to, you see it. This are zone. I told you when you close with the body, you see this one close with the body, you know that it's heading where? To the next one below. Except it doesn't close with the body, you know that that's invalid. This next one, you see at this spot, it did not close with the body, so price now start pulling back up. It didn't close with the body, start pulling back up. As it's pulling back up, where are you targeting next? First, you target this small one that is here, because this is where the opposite candle is. This is the opposite candle. Mark out the high. As price start rejecting back up. So at this spot now, price got a tap on it, start pulling back up, and this trade close here. This next one open, came back down, start pulling back up, came back down and close here. This next one open, came back down, start pulling back up where until you get to this zone I told you about. After goes into that zone and it close with a body, what are you looking at next? You are looking for the next zone. And what is the next zone? This point. After getting to this point and close with the body, what are you targeting next? This high. After closing with the body like this, what are you targeting next? You are targeting these highs. After closing, because if you go a lower time and you close with the body, target this high and it start dropping. As it start dropping, you didn't close with the body. Where are you targeting next? This one there. This body. It came down, it tap on it. Where are you targeting next? This high. So that's just how you work zone to zone. If you go to 1 hour, you still see the same thing. So you see, just go to your chart and do the observation of this zone to zone. You see what market is in it, tap on it, you see it closing with the body, closing with only the wick, not the body, and price start rejecting up. So do good and do your your review on it and get back to me. Thank you.